Good afternoon. Welcome into Market Talk on this Thursday, January 27th. Great to have you with us once again, making us part of your day. I'm your host, Jesse Allen. Thanks for joining us. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com. You can find all of our social media links there, all of our streaming sources, all the platforms we are on: Spotify, Apple Podcasts, Google Podcasts, SoundCloud, and so many more. Find all the info on our website, along with news of agriculture, market information, and much more. Well, as we take a look at the trade today, soybeans had another up day with corn and wheat under pressure. Wheat, especially under more probably profit taking pressure, maybe a little bit of the easing tensions with Russia, Ukraine. There's a lot of things in these markets to talk about, and we're going to get the latest on it as we bring in our good friend Bryan Doherty with Total Farm Marketing joining us here this afternoon. Bryan, good afternoon to you, sir. And another kind of topsy-turvy day throughout these markets. Stock market was up and down. We saw beans come off the highs, then go back up moderately. Wheat under pressure again. There's just a lot of things going on in these markets right now.
Yeah, a lot of volatility, a lot of movement, a lot of different, let's say, paths or angles you could look at this, whether it's the most current news or projected weather or worries about interest rate hikes or speculative money or farmers selling. There's a lot of things. Why don't we just, if you don't mind, we'll just start with corn. Corn sagged a little bit today in the front months.
Mhm.
And it's looking a little bit tired. It's reaching into the overbought territory, into the stochastics. It hasn't given a sell signal yet. Has not provided that. But when you look at the chart, got a pretty big update going here on Tuesday, and then finished down a penny. So we were up 10 cents at one point that day. Yesterday came back, good strong close. Today, no real follow through, as you indicated, or we talked about before. Export sales really good, solid number, marketing year high. Looking at bushels there that are just good to see that number. I think we were at 55.2 million. That's a good number. Now, go back a couple weeks, we had a marketing year low, so you got to kind of mix them together. We're still running at a pace that has some concern we won't meet the USDA projections, but we're at a good number. We really are. When you look at the where corn is priced, what I want to do is kind of put in perspective that if you take the total sales to date compared to expectations, you're going to find that we've sold 1.730 billion bushels, so 1.73. Market last or this month saw a decline of expectation from 2.5 billion to 2.425. So really, that puts us at 71.3% of expected sales to date. And the market's anticipating that'll tail off with Brazilian and Argentine corn, but the first crop Brazilian and Argentine crops are marginal at this point. So here we see a good export number today. We do expect farmers selling to pick up.
Mhm.
We just do. It's end of January. Farmers got to move grain. They got a good price. I'm not telling them what to do, but I would tell them not to get too greedy. It's a good level.
Definitely couldn't agree more. On the soybean side, we saw some more strength there today. I know there's some more worries about that South America production kind of coming online here. Worries about the forecast turning more bullish for South America, turning drier in February. Talk about what you're seeing in the soy complex today, Brian.
Yeah, you're seeing some private estimates, including one firm that talked about, potentially down to 125 million metric tons. The USDA is at 139. Year ago was 138. So there's a big gap between 125 and 138, and yet it grabs some market attention. There was some really nice reprieve of dry conditions in Argentina and parts of Brazil. Let's say 10 days ago, temperatures cooled down. Before that was really hot. And then it's been mixed showers and sort of mixed after that with a general bias for more of the same kind of warmth and heat or dryness into February. And the bean market's wasting little time finding buyers on that. The complex, though, is really supported by just skyrocketing soybean oil prices. Keep in mind, Ukraine is a big exporter of sunflower oil. In fact, we're the largest in the world. So that tension there, in addition to Indonesia wanting to convert palm oil to diesel, all of a sudden you've got crude oil here in the US, 85, $87 a barrel. You get palm oil, maybe using for energy. This world vegetable oil number is pretty, so that's been supporting beans. Bean meal, when it got dry in Argentina, skyrocketed from contract lows to contract highs in a matter of weeks. I'm going to say the bean meal, it had a good day today, but it basically kind of peaked out, leveled off. I'm not sure you're going to get a lot more strength in that market, but the beans are an interesting story. It's all about weather, and it's all about perception of how much crop will be available to the market and when out of the southern hemisphere.
Well, you mentioned crude oil, and I want to talk about that before we go to wheat. I know crude on Thursday making, I think it was what, new 7-year intraday highs above $88 a barrel. Then it kind of faded
Yeah.
here as we've gotten to the afternoon. What do you make of this volatility in the crude oil market and how that's spilling over to grains? Not to mention, on the flip side, we also had a surging US dollar today.
Yeah, so you have a hook reversal in soy or in a lot of markets today, but you've got a hook reversal primarily in the energy complex and the crude oil. So that means you're right. We went into new highs today, and now we're trading negative, and it finishes below where it closed yesterday. That's a hook reversal at the top of a market. Frankly, that's a $25 rally nonstop that maybe now showing a little bit of sign of being overextended, and it's in the overbought territory when we use our stochastics indicators. The stochastic lines are crossing over, providing sell signals. But to put this in perspective, a $25 rally from 62 is a 40% increase in crude oil value since the beginning of December. Now we talk about inflation. That's a lot of change. So it's just a kind of a leftover remnant of, if that's the right word, of, what happened 18, 22 months ago. Crude oil just blew out, excess supplies, the pumping stations, contracted dramatically, moved into this year, got a new administration, cut pipeline, production or
Mhm.
energy into the U.S. And then you've got OPEC, and they're not in a hurry to push things higher, I can tell you. None of these countries are. They're energy dependent and economically dependent on energy. And here we go. So we've got this big push here, and we don't have enough rigs coming back online here in the U.S. So got a big rally, but you did see a hook reversal downward. You mentioned the wheat market before. Um, sharply higher on Tuesday, off on
Mhm.
Wednesday, off on Thursday. A little bit of a de-escalation seems to be the pill for stopping that bull run quickly. And then the stock market has been, as you said, all over the map at 1,000 point range today so far. And we saw the other day where it was down 1,000 points, came back, finished positive, off about 10% on the year. Probably a little more reflective of growing consumer concerns about inflation and what do corporate profits look like in an inflationary period, especially with inflation and raising interest rates. Costs more to borrow, and you get less dollars for profits. So um, a lot of moving parts. Kind of wordy there, but that's. I want to make sure and kind of got all of that view of all of these things that are sort of connected, sort of not, but they are, commodities as a whole.
Do you think as well with the US dollar moving higher today, was that another factor aiding in the sell-off here in wheat futures on top of the Russia-Ukraine worries? Was that another reason we saw some profit taking today?
Yeah, it was. There isn't always a direct relationship, but generally, when you see the dollar gaining ground, it's an inverse relationship with wheat. So, wheat's produced in every major country in the world. It's harvested 12 months out of the year. The U.S. has sort of been considered the last kind of resort or last go-to market in the world of wheat. So when you have a surge in the U.S. dollar like we've had the last two sessions, and now the dollar's in the new high, and it's actually, just to put things into some perspective here, in the middle of the month, just like 2 weeks ago, we're down around 94.66. We're now 97.23. You're talking something close to 3% change in 2 weeks. So the dollar's increased in value in 3%. It's been a surge. That can put the skids on export prospects really quickly, especially in wheat.
How about let's go over to livestock, Brian? Hog markets found some pressure today. We saw some triple digit losses there. It just feels like this hog market's maybe run up against some sort of resistance here. Weekly export sales weren't terrible on the pork side. What's your thoughts with this hog market
Yeah, I
today?
think, they were actually considered pretty good at 49,000 metric tons. So I'd call it solid, is the way I would term that. Um, the market overextended itself. I mean, it just bullish, 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 several sessions in a row. Especially the summer months hitting, new high prices there again, made a reversal downward today. So if you're a bull on hogs, you've got some big bearish key reversals at the top of the market on the June, July, August contracts. That means we hit new contract highs today, took out yesterday's low price and closed lower than yesterday's close. When those things hit at the top of market, they really stick out. One only has to go back to the wheat market. It posted a huge bearish key reversal back in November, end of November, and flipped over and has not even gotten anywhere close to challenging the high since then. So those are some pretty big signals. Here's the wild card in hogs in the U.S. There's a couple. I mean, all of us worry about African swine flu, but PRRS is just an issue right now. And I just talked to a producer today, so we just don't know where we're going to be. We've got it. We've got it badly. Um, not great.
No.
I don't it hard to know when you hear a few negative stories, could balloon into something that really isn't as bad as it seems, but that's nothing to mess with. I know that.
No, and we're seeing PRRS in some of the main hog producing states in the US as well. I think the
Hmm.
I states, I think the Carolinas as well. We're seeing it there. So a lot of things to watch there on that front. You were absolutely right. How about over at cattle today, Brian? Kind of a choppy sideways day. It felt like in cattle. What do you think there, and what do you think of the weekly export numbers for this week?
They're kind of on the light side, I thought. I think we were 14 million metric tons. It just isn't. It wasn't a big number. So
Mhm.
so the cattle market looks to me like it's trying to consolidate. If you look at charts, we had pretty negative reaction to cattle and feed report early in the week, left some gaps, came back, filled those this week, and now are consolidating. January's been a more challenging weather time than probably all fall. But in talking to some producers again today, they've said, hey, just because it's generally dry, my cattle have gained really well. They're solid, they're big, they're heavy. So the market's got some of that cleanup to do there. I still go back to the last few weeks, the worry about COVID and lockdowns or whatever. Um, I just think it plays, into a negative on the demand, or at least perception on demand. Otherwise, that market's trying to come back. I wouldn't say I'm necessarily a wild bull, but it's pretty hard to be negative and probably even harder to be negative feeder cattle. My cattle guys are telling me those numbers are going to tighten up and they're getting tougher to come by. Probably the biggest negative is just the high feed input. But remember, the western states and the northwestern states have struggled with drought for well over a year, almost 2 years. So they've been, in the mode of figuring out how to contract or shift cows or do something just because of the lack of feed or expensive feed out that way.
Brian, how about over in the dairy markets? What are you seeing there as we wrap up this week?
Craziness. Limit downs and limit ups, lots of volatility. We saw this market just accelerate on some demand, lack of supply issues, just blow higher. As an example, if we looked at the March contract, um, if you looked at where it is today and where it was on January 3rd, if I told you on January 3rd, hey, that 2060 milk, and I told you today you have 2060 milk, and they go, oh, it's kind of consolidated. It's been a good rally. Well, in between, we ran up to just under 23. And, that's big percentage change. That's 15% higher after $20 milk. Now we're back down. So, like any market that accelerates and you see high volatility after acceleration, is probably trying to find its top. So, it's looking like a market that probably has been toppy. Um, Dairy producers no different than anybody else. If they got to go out and source feed, though, just depends what they're paying for corn. So they're paying 40 cents more for corn now than they were 2 weeks ago. Um, so that probably helps long term keep the bottom side supported as we probably see producers stay relatively close to the knife. But I got to tell you, anytime we look long term and historically when we see $20 milk or higher, that the herd expands, or we figure out how to expand it. In recent years, we've expanded really through increased cow efficiency, milk production per cow, not so much more cows, and that was evident on the last uh, production report where the production per cow was up from last year, but the cow numbers were down a little bit, but you still had more production.
A lot of things to take in with all of these markets for sure. Brian, any final thoughts you have for us today?
Just keep looking for the opportunity. The grain markets, corn, beans in particular, corn bean producers out there have been holding on to this old crop, continue to dribble some of it out. I know every time you do, and then a week later the market's up, but these kind of markets can cave in so quickly and collapse so quickly on just almost anything. Now, you know, weather in South America certainly change the tide of things. Either they have a big crop and good weather, or they don't, and it looks like they don't right now. So maybe we start with a newer level. So if you would have asked me a few weeks ago, I would have said it's tough to get through $6 in corn, probably good support at 5.50. We could go down to 5. Maybe we move that up a little bit, say, hey, probably not likely to go under 5.50 anytime soon. Maybe the market consolidates more around $6 and we get some run in the 6.25 area, but those rallies should be sold. So I'm going to continue to argue, keep your pay raises, sell. Farmers got to move a lot of grain between now and spring, now and fall. And if they've been trickling it out, there's still a lot on the hands, in the hands of producers. If things all of a sudden look a little different, it's a lot of corn that might hit the marketplace at one time.
Brian, I know if producers need advice, they can reach out to you and the folks there at Total Farm Marketing, your website, totalfarmmarketing.com, but also a good old fashioned phone call, can't they?
Yeah, good old fashioned phone call, and in those phone calls too, I can kind of keep with the up with the most whatever the latest we've heard, because there's um, a lot of things out there. There's some analysts we're paying attention to. They continue to kind of suggest the markets are undervalued. Maybe the final word there is to think about how to balance that. Maybe you need to sell some cash. Maybe you go back in and buy a bull call spread, fixed risk, good long term position. You know exactly where you sit between cash risk. You've eliminated that. You're back in the market. But we can talk about those kind of strategies that best fit the right tool for the right person at the right time.
You can give them a call, 800-334-9779. With that, Brian Doherty at Total Farm Marketing. Appreciate the time as always, sir. We'll talk to you next week.
Yes, sir. Do appreciate it. Thank you.
Brian Doherty with Total Farm Marketing, our guest today on Market Talk. Find us, markettalkag.com. I'm Jesse Allen, wishing you a great afternoon.